Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Mike Morawski. He is a 30-plus year real estate investment veteran and has controlled over $285 million in real estate transactions. So thank you so much for being on the show today, Mike.
Hey, thanks, Charles, for having me. I appreciate it.
So give us a little background on yourself, both personally and professionally, prior to getting involved in real estate investing.
Okay. Personally, nobody ever asks that. Kind of interesting, you know. Hey, grew up in the northwest suburbs of Chicago, you know, middle class lifestyle. Came from a family background that my parents were not entrepreneurs. Don't know where I got the bug. Didn't know about real estate, you know, weren't big real estate people at all. Was never really talked about. I don't know where I got the bug. But I kind of do know where I got the bug. And, you know, just quick story. I think I was 8 years old sitting on the side of a swimming pool with my dad. We were on vacation at a resort. And I remember asking my dad about all the rooms around this pool, the hotel. And he said, in his infinite wisdom, because he didn't know anything, he said, people come and stay here and they pay the owner money. And at that point, I knew I wanted to be the owner, getting paid all the money. So I think that's where I got the bug from.
Nice.
I've been an entrepreneur since my 20s. I would work for people and I would go, God, I could do this better than you. And, you know, it just was something innate inside of me that said, go do it yourself. And I wound up going into my first business. I was in the swimming pool business. Of all things, I'm in Chicago. So I don't know if you've ever been in the pool business in the Midwest, but it's kind of a tough business to be in the wintertime. And I was in the pool business. I couldn't keep guys working all year long because, you know, it just wasn't it was a seasonal job. And it cost me more money to hire guys, train them, and then lay them off, because then I'd have to hire new guys the next year. And I decided to go into construction business and do kitchen and bath remodeling. And went on to build room additions. That grew so fast, so big that, I had this very successful, general contracting business before getting into real estate.
Wow. And about what year did you make the choice to get into real estate investment, not just being a contractor?
There's easier ways to ask me how old I am. I am, let's see, it was 1990. I decided to go into real estate. So.
Okay, cool. So you got on, you started investing in real estate, and tell us more about your investing career, how you started, and just a little background with, you had a setback in your life, which we'll go through during this in the next few minutes here. But I met you, Mike, through one of our attorneys. We have one of the same attorneys, and I learned about your story, and that's why I brought you onto the podcast. So let us know about how you started in real estate and you grew this to 4,000 plus apartments or so. I mean, must have been pretty fast.
Yeah, it was pretty fast. So, 1990, 91, I decided to go into real estate. I knew nothing about real estate. I sold my construction business, woke up one morning, I was burnt out, and looked at my wife at the time. I said, I can't do this anymore. You know how it is being an entrepreneur, Charles. You're doing all the sales, all the marketing, all the bidding, all the work, So I sold the company, took a year off, and during that year I met a real estate agent who was very successful, and went to him and said, Todd, I think I'd like to go in the business. And he said, I think you'd be great at it. Encouraged me to go in the business. I went in the real estate business. My first 9 months, I sold 78 houses. I was RE/MAX Rookie of the Year. I went on to build a team selling over 100 listings a year, 125 listings a year, and did that consecutively for a number of years. 2005 rolled around. I saw the market starting to shift and soften, and knew I would need to go do something different if I wanted to keep the production up or keep all those people. I had 7 people working for me at the time and didn't want to lay anybody off. So I decided to go in the apartment business. Here's what I understood. I understood that if you raise private equity, you marry it with a great real estate deal, the two stay together, and everything goes well, you'll make money. So in 2005, I decided to venture out, raise some private equity, do my first multifamily deal, which I did. From there, I raised $18 million. I bought 4,000 apartments. It was $60 million worth of real estate. Bought that in 5 different markets and did it in 30 months.
Wow.
Built a property management company at the same time, managing 7,500 units. So I scaled a company pretty close to $100 million in value.
Wow, that's quite the growth that you had there in those 30 months. So you had a little pullback, like say, what happened, and tell us about. You have 7,500 units that are under management. You have 4,000 that you have equity in and have investors in, I guess, $60 million. And what happened that was the catalyst in 2008 with all these apartments and all this investor money that led to your, led to what happened in your life?
So I grew way too fast, right? In 2007, we bought 2,700 units. It was 17 deals. Barely had time to breathe closing all those deals. And I thought I had a great team behind me stabilizing things, and that wasn't happening. So 2008 rolled around. I'm very unstable as a company. 2008's like hitting a wall in a freight train at 200 miles an hour. The whole world starts to implode. I start to come off the rails with my company. Now, I had 38 different companies at that point, and I realized that they were unstable, undercapitalized, and over leveraged. Charles, I owned $16 million worth of real estate at 85% loan to value.
Wow.
Nuts. When we underwrite today, we're underwriting deals at 65 to 70%. So what happened was I had about a dozen companies I should have just let go to foreclosure and let those investors get hurt. But I don't want anybody to get hurt. I never like for anybody to have problems or issues. So I tried to save everybody. Hey, I thought it was a recession. It was going to last 17 or 18 months. There'd be a 10 or 12% correction in the marketplace. But it lasted 7 or 8 years with a 40% correction in the marketplace. A little hard to weather that storm. So I wound up coming off the rails. Tried to protect all my investors, and I started to move money back and forth between companies. So I took money from companies that were running well and putting it in companies that were not running well, and trying to prop up the cash flow, which in turn was fine. My accountant, my attorney both said it's okay to do that. Just make sure that you leave a paper trail. And we did that. And, what the market never bounced back. So I didn't disclose it to my investors. And because of non-disclosure to my investors, I wound up being charged on wire fraud and mail fraud charges and sentenced to 10 years in federal prison.
Wow. So when you were going through that, these properties that you're buying must have been quite the value add if they weren't stabilized at all. So you had a lot of debt on them, 85% loan to value, which was very normal back then. I remember this pretty well. And then at that point, what happened was that you're buying properties that need a lot of work, or they weren't rented, or whatever it might be, unstabilized. And then that kind of started that was really what you would say is the catalyst. Obviously, the market of 2008 was it, but in your own thing, because we had rentals and we didn't buy anything that was unstabilized during this time for the most part. And we didn't really have too many issues. So your issue was really just a lot of unstabilized properties and a lot of properties without renters in them.
Right.
Yeah.
So, we were buying a lot of value add stuff where occupancies were maybe in the high 70s. Banks were throwing money at you
Yeah.
though, and they were letting you do value add stuff like that, limited reserves. And, I don't know who was worse at that time, me for taking the money or the banks for giving it to us at 15% down. Right. So,
Yeah.
so somebody had to, take
Mm.
responsibility, according to the feds. And so I wound up going to prison though as a result of it. And 2013, I went away on a 10-year prison sentence, and I thought my life was over. I, you know, thought that it was done. And so I'm in prison about 17 days. And here's what I always tell people is I never flew private. I didn't have a boat. I didn't have a big house. I didn't have a fancy car. I was the neighborhood baseball coach. I was home every night for dinner. My wife and I had a great marriage. We were best friends. And I got ripped from that to live in a 12 by 12 room with three men I didn't know, nor did I like, and had, three green outfits and five pairs of underpants.
Mm.
And like I said, wondering what happened in my life. And I was in prison about 17 days. And while I was gone, my wife decided to divorce me about 3 weeks in, and it wrecked me. And then I was really like, what am I going to do? How am I going to get through this? And Charles, a couple things I really believe in my life. Number one, success leaves clues. I went to that real estate agent early on, learned what to do, went into business, and just, followed some basic fundamentals and was very successful as a result of it. Lesson two, that we have defining moments in our life, that things happen to us and all of a sudden we go, wow, what do I do now?
Yeah.
So I'd gone from running marathons to being 35 pounds overweight. I hate myself. My wife left me. My family's a mess. I'm in prison. How am I going to get through? The joke was, hey, let's take his shoelaces because we think that he's going to hurt himself. And I walk into gym one day, about 6 weeks in, and this guy walks up to me and he says, hey, don't let these people beat you. He said, all they want to do is take from you everything you've ever known. And they can take your real estate, they can take your business, they can take your money, they can destroy your family, but they can't take who you are. They can't take what made you, what helped you to build those companies you built. He said, you can get all that back. He said, you can get this 10 years back. He said, come to the gym every day, work out, start losing weight, start feeling better, start liking yourself again. I mean, I don't know where the wisdom came from. And I did that. I said, I'll take you up on the challenge. And I started going to the gym. I came home in the best physical shape of my life I'd ever been in. I went to college. I got a bachelor's degree in theology. I wrote 2 books while I was gone. One is Exit Plan, Your Complete Guide to Multifamily Investing and Why You Need an Exit Plan Before You Buy. I wrote an ethics course. I taught real estate investing, property management, and ethics in prison for 6 years. I was on an outreach program. I went into the community, told my story to small business owners, local college students. And then I met a professor from the University of Minnesota that he and I co-authored a paper together that we got published this year in the Business Journal of Ethics, which gets taught at the collegiate level for forensic accounting and sales and marketing classes. So as much as my life got wiped out, I turned everything around. And today, I feel like I'm just full of life and resilience, rebuilding my life. Today I'm in the coaching and training space. Hopefully teach people how to build a multifamily business without burning out, with living a balanced lifestyle and without making mistakes.
Well, that's very powerful, and it's great that you were able to speak to that person when they spoke to you, because that changed the whole trajectory, I think, of that 10 years. But so, what were some main takeaways? Obviously, you wrote books on property management. You taught it, and obviously not commingling cash anymore. But the thing is that what main takeaways you're having? You're underwriting a lot more conservatively. What other kind of what did you learn that you're now implementing into your real estate investing business?
Yeah, great question. So, like I said, grew way too fast Today, I'm more systematic about the growth. Recently I've been approved to go back and do deals, be an issuer again, and be a sponsor. So that's been nice. Got a legal opinion on that, and back, building a business, building a multifamily. I'm in the trenches with my coaching clients. So when I partner, I partner with my coaching clients. So it's kind of nice. The first thing I learned was don't grow too fast. Make sure you take your time. An old carpenter taught me. He said, "You cut twice. I'm sorry, measure twice, cut once." And that's the philosophy today. Is we check everything a couple of times before we pull the trigger. So I was undercapitalized, didn't raise enough money. Another thing I did was the market was so hot then, Charles, similar to how it is today. I thought I would create this selling technique in my offerings, and I pulled some language out of my PPMs that said, "Hey, we'll never have to do a cash call." So I tied my hands by not being able to go back to my investors and saying, "Hey, we have a problem. We need more capital in the deal," because we were restricted from doing that, because I didn't think the market would do what it did, and that we would always be able to have excess of cash coming in. So that was an issue. Didn't raise enough money, so I didn't have enough in reserves or sitting on the sideline to weather any type of a storm. Over leveraged. I was 15% down on $60 million worth of real estate. As 85% loan to value. That's crazy.
Yeah.
And then, I didn't listen to the details around me. So, quick story. I was closing a deal in 2008. I'm in a closing room in Cincinnati, and I'm waiting for my office to wire $500,000 to the closing, and it's not coming. Finally, my partner gets on the phone, and I can't get a hold of him all day. Can't figure out where he's at. But he gets on the phone and he's like, "Hey, I don't know how to tell you this." And I'm like, "You don't know how to tell me what? What do you think? You need $500,000 to close a deal, and now all of a sudden your partner says this." Well, he had moved money from an escrow account, and I just went crazy. I was like, "Hey, listen, we had this conversation before we went into business. You never do that." Well, I never tell my wife about business. I never talk to my wife about business. She just worried about everything. And this was the same thing. I come home on Wednesday. I dry close that deal. We sign all the paperwork, say I'll have it funded by Tuesday. I come home over the weekend. I wind up raising more money, giving some equity away on the deal, bringing some investors in, and we got that deal closed. But on Friday night, I go out to dinner with my wife and my partner and his wife. And on the way home from dinner, remember, I don't talk to my wife about business. She doesn't know what happened on Wednesday. On the way home, she says, "I don't trust him." I'm like, "Oh, I think I'm going to be a good husband." And I go, "Hey, honey, I got this. I got your back. We're fine. You're safe. Everything's good." When really I should have said, "Tell me more about that. What am I missing?" Right? And I tell that story because we don't pay attention to the details around us. We get so focused with the blinders on that we don't watch the peripheral vision. So on Wednesday, the following week, I'm out to lunch with my attorney, and we're leaving lunch. We're in the parking lot, and this is a longtime friend, does all my business stuff for me, puts his arm around me, and he says, "Hey, I want to talk to you." I said, "Okay." He said, "I don't like what I see going on in your business. I don't like what your partner's doing. I don't like where things are going." So I've got two people within 5 days of each other that are telling me they don't trust my partner. And I've got my blinders so tight on that I'm not paying attention. And I say, "I got this under control." And I didn't have anything under control. So I say that because I want people to pay attention. Watch the details around you. Know if something's off kilter, if you need to do something different. So
That's very interesting. I have a mentor of mine years back, and he would tell me that he would always bring his wife with him to dinner or anything like this to meet higher level jobs that they were when they had people coming on for their business and higher level positions. He would always have his wife meet them. And it's something that stuck with me is that I take my wife with me when we're going and meeting partners or potential partners or anything like this. So it's something that I've heard that a number of times, and that's great that you've seen that, and then obviously your other professional there saw it as well, your accountant or whatever it was, that he noticed what was happening as well.
Charles, we think we're so smart. Well, I firmly believe that God matches us with our spouse because they're smarter than we are. So we need to pay attention to what they say.
So, Mike, going forward, tell us about what you're doing now. You're still in obviously multifamily. You're doing deals. I know you did one, you're doing another one or a few in Tampa is one of your big markets. Tell us what you got going on now for your company.
Yeah. So, I'm in the coaching and training space. I work with real estate investors and entrepreneurs, multifamily investors, helping them scale their business, coaching them, helping them build their business. And I really have a passion for the business and have a passion for helping people. I also am back in the trenches. So I'm, actively seeking out underwriting and putting deals under contract and raising private equity. So we're out building business. We're out building a multifamily portfolio. I've taken a couple of my coaching clients. We've gone and found a great family office to work with, a great key principle that we've brought to the table. We've all come to the table and are building this platform that we'll probably scale that business, somewhere around 1,000 units in the next year is where we'd like to get. So it's kind of the goal we're shooting for.
So as a coach, what is your advice to new multifamily investors when they reach out to you? Do you suggest them to do a deal 100% themselves before raising money, or when should they feel comfortable taking money from investors? Because I get this question all the time. So I'd like to hear your input on it.
Depends on the person, right? And it depends on their goals and what they want to accomplish. Hey, I went from selling residential real estate to raising $18 million in 30 months. What do you want to accomplish and how fast do you want to do it? But systematically. So I always tell people, I say, listen, let's get really clear first on your goals and your why. Let's get the clarity down, because when the tough times come, you're going to need to tap into what's really important and tap into that. So we start there. And then we start with two key principles, which are building relationships and strategic alliances. How do we build those relationships and build strategic alliances? What does that look like? And every person is different, is what I find, right? Because some have relationships, some don't have any. How do we teach people how to do that? And then the next piece is sourcing and locating deals on market, off market. Part of that relationship thing is these brokers today, Charles, are so busy to try and get a return phone call, and there's tips and techniques that people need to work into their languaging when they call a broker. And these are things that I've developed over time that I teach people how to do.
Yeah, that's definitely true. They have thousands of people on their email list, and when they send it out and you're contacting back, they're that's what you see too. Like when you're putting a lot of offers in on properties, they pretty much are sending you out a questionnaire on who you are and what you've done and what you're doing currently and who's on your team and how many units you have and all stuff. And that weeds out a lot of people because they don't want to waste time. And you have to know how to speak to these brokers and how to deal with these brokers, you or someone on your team, and to be able to be successful in actually closing deals, especially where we are now.
Yeah, absolutely. You couldn't have said it better.
So what are common mistakes you see other real estate investors making now? I imagine you saw a lot of mistakes happening now that happened in 05, 08. So give us a little background on what you see maybe might be different from these two periods, or that you're seeing a normal thing that's happening.
Yeah. So, there's that old cliche that says the only time you lose is when you quit, right? I
Right.
see people quitting too early.
Mm,
So they get in the business, they try the business, they don't get a deal done, they quit. I underwrote 100 deals to write 7 LOIs to buy my first deal, to get my first one under
mhm,
contract. Okay. What are you willing to do? I work with an investor that, writes 100 offers a week to buy 1 or 2 deals a month. So,
mm,
you know, what are you willing to do to get outside your box to stretch yourself? I believe that we all need to stretch personally to grow professionally. We don't grow professionally till we grow personally. And that's
mhm,
part of what coaching is too, is how I work with people and stretch them. But here's, people need to underwrite more, and they need to underwrite more conservatively. They
mhm.
need to
Yeah.
stop promising investors today these returns of 20%,
Yeah.
because they're not there anymore. And as the
Mm,
interest rates come up and we move closer into inflation, returns are going to change. I have a good friend who's underwriting deals today at 50-50. They're raising 50% equity, and they're only paying their investors 5 to 6% cash on cash. No IRR, no equity in the deal. So it's time to start changing, because the market it's going to fall. The question becomes when. And I certainly don't want to be a doomsday person
mhm.
here. And I tell people, keep investing. I'm still investing. Just change how you're doing it.
Yeah.
I made these mistakes before. I was over leveraged, undercapitalized. The market was so robust, I didn't think it was going to fall. Don't fall into those traps today. Make sure you're doing something different.
Yeah. I see that a lot too with when we're putting together deals, or when I'm looking at other people's deals that they're sending to us. I imagine you're on a lot of those email lists too, and you're reviewing what people are doing, and very highly leveraged. And I start seeing deals that are going into 20% plus, and it's that stuff we were seeing a few years ago, right? But it's now, I think that it's very difficult with these business plans, because rents are going up, and we hear that everywhere. Rents are going up, and everybody's focused on these states with a lot of population growth, and that's great. But rent going up year over year in let's say Orlando for 22%. I mean, that's just not going to continue. I mean,
Right.
there's not the income, especially with inflation. Wages aren't going to go up with it. It's just not going to happen. Now, is it going to be better than buying somewhere? I don't know, in the Midwest or something, maybe, I guess. But you're just not going to have that continued growth of where we've been going for so many years. And now, I mean, we're going in 10, 11 years, 12 years into this market.
Right. Right.
So what do you think the main factors are that have contributed to your success?
Oh, my tenacity. Um, I think in my bio there it says that I live a resilient life. Um, I won't allow the past to dictate my future.
Mm,
Um, I'll learn from the lessons and continue to push forward. I had somebody, I was probably in the real estate business 3 years, and I walked in a client's house, and he went, "Man, Morawski, you are so tenacious." I had no idea what the word meant. I said very graciously, I said, "Thank you, appreciate it." Hoping that it was positive. Went home, grabbed the dictionary, and I went, "Damn, that is me. I don't give up." I had a mantra when I was selling real estate that you would either list with me or you die. That was it. So, because I follow up and follow up, and that's how you have to be as an investor. You have to be diligent about it. It's a tenacious business. We're running a marathon here, not a sprint. So,
yeah. Yeah, it's amazing how similar what you're doing is or what we're doing is within sales and marketing, where you keep on getting yourself out in front of people, in front of buyers or sellers, in front of your agents, brokers that are listing, and hey, when you have something, if you're and especially the same thing with investors. I mean, you got to keep those plates rolling of deals, and also of money coming in, so that you can do deals and be able to close on them when they come across.
yeah, for sure.
So how can our listeners learn more about you and your business, Mike?
Oh, Great. I love the network. So anybody wants to pick my brain, has a question, call me. I'm accessible, very accessible. Um, you can email me at mike@mycoreintentions.com. I'm huge on social media, so wherever you hang out, I hang out. Whether it's me personally or my business, My Core Intentions. You can find me on Instagram, LinkedIn, Twitter, Facebook, YouTube. So podcasts and go grab a free copy of Exit Plan. You can download that for free at my website. You can go to mycoreintentions.com/exit plan. And then all I ask is that you send me a review, what you thought of the book. That's all.
Okay. Yeah. So I'll put in your in the notes section here, your website, the website address for the free book, and then also your email address.
Perfect. Thanks.
Well, thank you so much for being on today, Mike. Looking forward to connect with you in the near future. Have a great rest of your week.
You too, Charles. Thank you. It was an honor.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.